Good afternoon, everybody. It's Matt, aka the Lumberjack Landlord, and I started looking at some of these numbers a lot more intensely over the last week. Mike and I were talking about it off camera. We think this is the perfect topic to bring to you, but let me first welcome Mike to the channel. Mike, how you doing, my friend?
I'm doing well, man. This is an important topic. I honestly had long thought that we could never see an '08 type crash again because the lending was so different.
Yep.
And I said that very naively. I had a very myopic view on the US market. Unfortunately, our friends to the north could be in real trouble and really experience an '08 like environment, which is unfortunate. And you may not know this, but it'll even be worse there because in the US, in many states, when you default or lose your home, the debt's kind of wiped away. It's not the same in Canada. If you get hit for a $40,000 judgment, it sticks with you.
It does.
Now, of course, the government could come in and, change the rules of the game midstream. But as it's set up today, I can't wrap my way around how this doesn't end badly. Sorry.
So the three major tent poles of what we're talking about, if you haven't picked up on already, is the Canadian housing market. And is there any contagion in that Canadian housing market for the US housing market? Kind of the general rules of thumb for the Canadian housing market. And again, not a Canadian housing market expert, but it's based on a little bit of research that I've done and what I now understand of the market and having talked to some of my friends north of the border, And I love my Canadian brethren. Even though the national sport is not hockey, it is actually curling. They are still some of the greatest hockey players in the world. Now, and yes, I said some of, and I know that I'm going to get some Canadian hate mail. That said, let's look at the market. And the market really there where it really truly differs is a majority of the mortgages, they are all not fixed rate mortgages, but all of the banks but one offer only a 5-year ARM product. That is usually that's going to be the longest term that you're going to get is a 5-year long adjustable rate mortgage. And the low rates in Canada started about 5 years ago, between 4 and 5 years ago. So now those resets, Mike, those resets are going to start rolling and rolling heavy. And that means that people are looking at massive payment increases.
Yeah, I would ask anybody here who has a mortgage or even just knows how to, pull up a mortgage calculator online. The more and more I look at this, the more and more fearful I get. I'm truly we are going to see Canada go through an '08 moment. So let's do some math.
Yep.
Just pull up, mortgage calculator, put in $500,000. Just do that. And, Canada, if you guys don't know, had very low interest rates there. It was not uncommon to have a 1 their five year ARMs.
Correct.
So you go like 1.3, 1.4. And if you guys haven't figured out, the Canada Central Bank, much like the US, has started to raise rates. And I would argue that the Canadian Central Bank is actually very aggressive. And they just did a surprise 100 basis point move yesterday.
Yes.
What does this all mean? It means very likely that people will, when it comes time to refi or recast that loan, are going to be going from a 1.4 to a 3.4 or 3.8. Heaven forbid 4.2 it's unaffordable. It's unaffordable.
They still do 30s, right? They do 30s.
I think they're 25 actually, but let's just use 30. It doesn't, as long as it's apples to apples, you'll get the scale.
Sure. So we're looking at and a lot of properties. This is an inexpensive property in Toronto.
Oh, it's,
so, $1 million. Okay. So I'm using $1 million as the number.
Go for it.
So $1 million, your 1.75% interest rate is going to be $3,451.20.
Okay.
Okay.
Yep.
If we just change that to what's the new current rate?
I don't know. Let's say 3.5.
Yeah. 3.5. Oh no. 44.90.
Yeah. So this is $1,000, and let's, that's $1,000. That's a 30% increase in your mortgage payment before taxes and insurance increase, which I'm assuming are up as well. Most people are not getting wage increases of 30%. I read an article in the Wall Street Journal, I think it was 8, maybe 10 weeks ago, where they were estimating, this was before the surprise 100 basis point move. They were estimating that somewhere between 25 and 30% of homeowners would not be able to afford their new payment before the 1% increase.
Yes.
Again, what causes a housing crash? Forced sellers.
Yep.
Wave after wave after wave after wave after wave after wave of forced sellers. When you have a debt structure that cascades and then only gets worse, right? The payment goes up, the value, it's just, oh my God.
But you can only refi out, right? When we hear that in 5, 6, and 7, you can always refi out. You can always refi out. And so a lot of these people can refi out, did so, bigger number. Maybe they use their houses as piggy banks. Maybe they didn't. But most importantly is that 1.5 rate or 1.75 rate is likely gone forever.
Yeah. And again, this doesn't end well. I mean, you could look at this in Canada. I mean, again, so a couple of other things you don't know about Canada's housing market. You know, we just talked about New Hampshire being the most unaffordable in video number 1.
Uh-huh.
I got to tell you, I don't know if you've actually looked at the numbers. New Hampshire would be considered affordable in Canada.
Oh yeah, no, for sure. At
Toronto, Vancouver,
yeah. Yep.
You know, again, Canada's housing market is 2 or 3x less affordable.
Yes.
Less affordable.
Yes. Yep.
This is before the interest rate rise.
Yep.
Right. So again, when you talk to Canadians about how unaffordable we are, they laugh at us.
They do.
And then they really laugh when they realize we have 30-year fixed rate debt. So right. I'm somewhere between concerned and frightened.
Yeah.
That the Canadian housing market is going to experience a disaster unfold over the next 1 to 3 years. Now, it could be solved overnight.
It could be.
The Canadian government could say wishy-washy, everybody gets 5 more years as is.
Yep.
You're okay. Everybody's okay there. Because again, if you're making the payment now, you're making the payment the next 5 years. They could flip everybody to 30-year money overnight. I mean, they can fix this. However, if you know, at least my experience with Canadian history, having studied it a little more than you over the last couple of decades, they're much more free market than we are, right? You think the U.S. market is free market, but every time we have a crisis, the government comes in and screws it up, right? Bails people out. Canada, historically, not a lot of bailouts. Nope. I mean, they've done some, but not a lot. They are very apprehensive. So it would not, there's a lot of, I've started talking about Canada a lot. Some people are like, oh, Michael, they'll just come out and bail everybody out just like we do. I'm like, that's not in Canada's DNA. I don't know.
Well, so, and you can correct me if I'm wrong, because I know you know more about this than I do. They're currently not allowing and haven't allowed any foreign investment in like 12 or 18 months.
They did. I think it was, it might be up to 2 years. I forget when they signed it. It might be 18 months. But yeah, and they just extended it for another 2 years, right?
Mike, they're going to need that foreign money to bail out, right?
Well, again, it depends on what you're trying to solve. If you're trying to create a more affordable market, they probably keep it away, let it crash and go, hey, look, everybody can buy a home now. But then there's a whole bunch of people who are saddled with, you think student debt is bad in the US. You get saddled with housing debt that you can't pay off because you owe 100, you wrote it for, you owe a million, you sell it at 800. Canada's going to kick in. It's going to say, hey, you still owe 200. They don't wash that away. So man, it's a mess. It can't, my hope is they find a way to fix it. I think the easiest way is to extend and pretend on the mortgage rate. Hey, everybody's good for 5 years. Let's get through this. But man, if they don't do something short of that, disaster.
I mean, Mike, the numbers are nuts.
Yeah. And again, they did a surprise 100 basis point move, and you already had roughly, let's just round it to 30% of folks that couldn't afford it. You add on another whole point, and you're probably not done. This gets bad fast.
Yeah. I'm very concerned. I don't know that it has any contagion to the US. I don't think it does.
That's a good question, right? So I do not know of many financial institutions that have huge Canadian like the Bank of Canada does, but it's a Canadian financial institution, right?
TD does.
TD, right. Yeah. Again, yeah. So the question that we would have to know is like the Citigroup, JP Morgan, Wells Fargo, what is their presence? I'm sure they have some.
Yep.
But is it a 5% book of business? Is it a 15? Is it a 50? Like, one thing I would love to know, just thinking off the top of my head, is which U.S. institution has the largest Canadian book of mortgages? That's what I'd be looking for. If I was a financial institution, that's what I would look for, because I would be reserving for bad debt right now.
I mean, how could you not? What American
bank? Look at you, Google. Let's see what and if I were to guess, I actually have no idea. I have no idea. It's probably, I'd probably go Wells Fargo or JP Morgan.
Let's see, Canadian bank.
I'm not even sure they slice it. I haven't looked at their financials in so long time. I don't remember anybody slicing it that way.
No, I don't see. I don't see any of that. I see all of the Canadian banks listed.
Yeah.
TD might be the closest.
Yeah. So folks, if you're watching this and you want to do a Google research and get some points from us, tell us which American bank, which you hopefully know what I mean by that, which American institution has the largest book of mortgages with Canada Housing. I'd love to know that.
Yeah, very much so. Mike, love talking about this with you. We'll definitely get some feedback from the viewers. Again, Mike and I are not Canadian market experts. We're only outside looking in, mainly because you won't let us invest there.
Yeah, we can't buy. You said no.
I mean, Canada, you're close enough. Like, we can get up there. So and I know that was horrible.
And just for the record, I've been to Canada 50, 60, 70 times. It's a wonderful country. The people are amazing.
Love it.
My favorite city around the world is Toronto.
Toronto's awesome.
Yeah, Toronto.
And I hate saying that because I love the Bruins and I hate the Leafs, but you know it. But you know what? You guys are gonna win a cup before us anyway, so it doesn't really. It pains me to say that. At least it's not Vancouver. So, or even worse, the Habs, Montreal. Yeah, can't ever root for them. So, Mike, thanks so much for doing this video with me. Tell everybody where they can find you, my friend.
One rental at a time.
Awesome. And live stream tomorrow, 8 a.m. Pacific time, 11 a.m. Eastern time, goes for an hour. Lots of fun. If you want to make sure you get your question answered, you know what? List it. But you know what? He's not getting anywhere near through all the questions because I actually attend. Super chat the man.
Yeah, I will. Yeah, you super chat me. I'll read your question first.
Yeah, super chat. That's the way. I mean, that's the Google etiquette and the YouTube etiquette. So super chat. I know you'll get your question answered. I can't promise that you like the answer or not. But no. As I always say, we try and create great content for you. Please like, subscribe, and most importantly, we will see you guys in the next video. Thanks so much, everybody.